Happy Friday, traders. Apologize about the delay. I had some issues with the broadcast system here, but it's all good. I believe the sound is good. Everything's good. Let me know if it's not. Thanks for joining me again on another end of week. Um, we are about halfway through November at the moment, or January at the moment. Time's going by very quickly. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. This morning, the equities are off a little bit, but recall yesterday equities were off on the open, and then the market traversed the entire range from the prior day, which is basically a bounce day, and gave us another. I affectionately call it a fugly profile. The market is continuing. The ES is continuing to seek or retest prices that we rushed through on the way down in the month of December. Remember, we're about 300 points off of where we were, 200 something points off where we were at the high. We've had this pullback, but really on a grand scheme, it really wasn't all that big. Yes, it's I think at its worst, it was down 25% from the high or something, but the market's making a decent recovery at the moment. So overall, the laggard today again is crude, $51.91. It is the at the bottom of the pile here, down 1.27, followed by the Nasdaq, which is down 24 points or 0.36%. The the safety assets, the British pound, the cable's up 0.5%. The bonds are up 13 ticks, which is uh, pretty decent for that product. Gold is up $3.30. Gold's trading again above $1,290 at 1,291. Um, and so this is where we are. It seems like risk is off, but really on a 2-day basis, on a multi-day basis, we are completely back in balance and trading the same prices that we have been over the last couple of days. So yesterday broke the low and the high in the ES. We'll cover that in a minute. As far as the economic calendar and what we have to look forward to, we actually don't have anything left that could interrupt our auction. Nothing scheduled, at least. We got to keep an eye on this record-making government shutdown here in the U.S. Government workers are scrambling to meet their obligations for rent, food, and so on and so forth. A very terrible situation for those people stuck in that scenario. Um, and so we'll keep an eye on that. We did have Fed's pal yesterday speak, which caused the market to whip around a little bit. But overall, it's business as usual. Since the beginning of the year, it's to me, it still seems a more difficult read. The one thing we need to keep paying attention to is Brexit. Let's not forget about that. The Brexit debate continues ahead of planned meaningful vote scheduled for next Tuesday. Chances of a no Brexit deal diminishing as PM loses control of post meaningful vote timeline. Okay, so we need to pay attention to that coming into next week. Let's take a look at what we expected yesterday versus what we got in our review segment. Um, so in our review segment, the primary scenario, given what we where we were opening and what it did the night before yesterday, the primary scenario is that it's likely to push into, follow the green here. For the primary scenario, we expected a pullback into the prior day's balance area of value and then a drop. I still have the key prices below 25.38 and 25.22.21 as big targets, and I said that I would expect yesterday or today to get those to start hitting those areas. That definitely wasn't the case yesterday. Yesterday played out scenario two almost perfectly. Um, with a dip towards the overnight low and then a push to take out the overnight high. I didn't anticipate taking the overnight low. With a push to take out the overnight high, consolidate, and then take the prior day's high and start moving towards 600 and 606. Here's what actually happened. This is the post-mortem portion of our broadcast. Probably should look at the 15-minute actually. So here's the 15-minute. We dipped down. We did not take out the prior overnight low. We pushed down. Looks initiative initially, meaning moving away from the prior day's range and value, and then it comes back in. Pretty good volume on this push up. Again, the same bracket keeps breaking higher. It seems to break somewhere around 9:15 to 9:30 on Chicago time. And then we push back into the prior day's value area, test the value area, and then squeeze into the prior point of control. And then we pull back. This is when Powell spoke. We pull back and then we grind our way up to take out the prior high. So if I expand this, seems like there's a lot on this chart, but it's actually fairly simple. The prior day's high, 25.9675, and we'll push 25.99. So what we had is a day that opened below, tested below. This was not an excess low. And then pushing right through the range to test the other side and finish in range. Relatively bullish to balanced behavior to come right back in. Here's the thing, though, to note: if when we look at the profile itself, that's not a good color for a profile with the background, but when we look at the profile, here we have this again, this um, jigsaw-y or serrated profile. Yet again, we're not seeing more of these consensus type trades. And normally the market, when we have these types of profiles, the market is really actively seeking consensus or seeking value, and it's been doing that for some time now. We've seen it, sell off pretty hard in the month of December. We've seen it recover since then. And it's doing this in a very serrated, very erratic kind of way, which I discussed at length yesterday, has made it very difficult for me to get a good read on the market. If this continues, I would have to re-examine my trading plan and see what areas I can find an edge in using the same core foundation of auction theory along with statistics and so on, but to find a different edge or a way to see things. Now, an example of that, I'll give you an example of that. The example would be, I've noticed that the standard impulse continuation, the impulse continuation trade into a stock zone has not been doing very well. It's an impulse continuation, and then the continuation ends up going and going and going and going, and causing a stop. So it's kind of continuing to do that. Also, we see impulses that have no continuation as well, and that's a deviation from my normal approach from the market or my normal expectation. So in that situation, I've been doing this almost 19 years now. The only reason I've been doing this 19 years professionally, full time, is because I'm adjusting to the market. I'm always aligning myself with the market. I'm not going to sit here and talk myself into accepting that what I do is correct and the market is wrong. So I have to go back and look at the last couple of weeks and see what has changed. Run statistical studies and so on, and see what's going on that I can take advantage of. I have to adjust. The market does not. Just remember that. Anyway, so yesterday, as I said, played out scenario 2. Dip down. There it is. Dip down, push through, consolidate at the point of control, and then continue higher. We did not attain 2600 or 2606. We stopped just before. We stopped 2 ticks ahead of the century figure at 2600. Our high is 2599.50. Um, and we've turned a little bit. Today, it leaves me, looking at the overnight session. Again, we have a very balanced overnight session. Notice that the volume overnight has been falling, um, consistently falling, and this is really a balanced overnight session. We haven't seen this in a while. We haven't seen this in a while. And so what we have here is a market that clearly defines balance. We are below the point of control. We're below VWAP and mid for the overnight session. We have been exploring to the downside more easily than to the upside. And this is a typical behavior when we are in a rally for volume to start diminishing, for the VIX to fall, for volatility to fall, and so on and so forth. So range, volume, all of those things kind of collapse when we're in an uptrend, and it's been doing that quite systematically. Here's where we are, what we've done don't worry about the little grated cheese that's sprinkled all over this chart, but this here is yesterday. This is all yesterday, okay? And this is what we've done overnight. And what I want to focus on in this chart is what we've done basically since the European Open, the European Cash Index Open is right here at 2 a.m. Chicago time. We pushed up and consolidated, pulled back, had the usual or the common pullback to a zipper, to a consolidation zone, and have been uh, zigzagging down uh, since. So this is the current trend, and I expect that that's how we're likely to open. So let's get to the open and current conditions and what's expected now. So, all right. So before we do that, though, as you have become accustomed to if you've been watching for a while, it is Like Friday. Take a moment and find the like button and hit it, please, for me. It does help me out. And if you don't see the like button, you can click on the YouTube button and go to YouTube, log into your Gmail account or whatever, and then hit like. I would appreciate that. Okay, so here's where we are. Let's pull up, where's 1 sigma? 1 sigma is 2542. Key area 2538. So we're opening in range in what we would normally call value, but boy, is that really ugly value. We are basically, let me switch this composite real quick to visible only so that we can use it as almost an MC. So as we pull in the prior days, you can see with this, as I shift more data in, it changes. And what we can see is that these last 3 days here have been trading on top of each other, and the point of control for these is 2585. And guess what? Where we're trading right now? We're trading right on top of 2585, and that's significant. That's significant to pay attention to when we're looking at our opening scenarios. So we are in the middle of what is the most accepted price area, expecting chop this morning, expecting a dip below the overnight low to continue this trend that we've had in the overnight session. And then I'm looking for it to push as far as 25.72.75. I'm looking for a return back to the point to the open and then a test higher. And the reason I'm doing this is because I'm following on what we see in prior days, right? The market acts, the market trades in cycles, and the primary scenario is always looking for that cycle trend and is trading with the trend, what has happened lately. And what we've seen is the market dips and then it starts to find buyers on the way up. So I'm looking for this to take place. I'm looking for us to get to 2600, consolidate, potentially push to 2606 into the close. It is a Friday. There is no holiday or anything next week, so it's a normal Friday. Generally, the range on Friday is relatively tight uh, compared to Tuesday, Wednesday, Thursday, but that's what I'm expecting in terms of what we've got going. Secondary, we get responsive towards the prior day's close and the point of control. Push in there, squeeze above 2600, pull back, consolidate, and fall back in. And I expect this to be a fairly choppy, um, choppy trade. Now, none of this matters, of course, because this is only intraday thinking. My time frame is for day trading. None of this matters if something happens with this administration or with trade or all of these clouds that the market has above it in terms of risk. Okay, so there are trade talks going with Europe and China, and there's this government shutdown that's being kind of bullied through, in my opinion. There are a lot of things that are playing along. There are Fed speakers that might release something here or there. I don't know, but these plans do not take into account what inputs come from geopolitical events. Okay, that's all I have for you. It is Friday. Make sure, be smart, please. Do not stick your neck out just because it's Friday. Just because you may be down the first, second trade does not mean you should push for and find trades. Your job is to stick to your plan and only trade what you see. And Friday is a perfect day to get yourself dug into a hole and to start your weekend on bad footing. Good luck today, and I'll catch you on Monday. Take care.